Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. I'm trying to get the right day here. Here we go. Now I did finish, okay, last week, although I should say not, the week before I did not do a recap. I had a busy weekend, so I did finish that week with 13 wins and 1 loss for a win rate of 92.86%, so definitely pleased about that. In this past week, 14 wins and 2 losses for a win rate of 87.5%. So definitely pleased about that one too. Been doing pretty good lately. I'm not going to complain. 1 loss here and there, especially how trappy the market's been. It's just been very, very tricky to trade. Hopefully, with elections this week coming up, we'll get something happening, and maybe the market will change, go back to the way it was. I've kind of gotten used to the way it is now, but we'll have to see what happens. So get right into it. Monday, Trade Ideas Room, I said SPY puts into 581. We gapped up at a big gap up. 581's right here. I didn't do anything until 11. I took puts at 11:03. It was right here, right when it got down to lower day. So I grabbed the 58.25 puts at 670, and as soon as I got in, it popped a little bit, but I ended up adding more right when it popped in this candle right here, and I added more at 4, making my new average 535, and then we finally dropped right here, and they went to $8. See, this is what I'm talking about. It's not making a higher high, and it's making a lower high. It didn't break higher day, so it flushed through VWAP and came down to lower day. It should have flushed, but it didn't. It stayed within. It got bought up as soon as it made new lower day, barely, like by a penny or two. So it got bought up really, really quickly. To me, it still looked weak, but I think that at this particular time, I was thinking we were going to stay within the range. Thinking range was 582 to 581. So when it failed to break the range and got bought back up, so when it came back up to VWAP, that's when I decided to add, because if you hold and don't add on a range day, you're going to take a loss. So the best thing to do on a range day is to add. If you're on the put side, add on a bounce, and if you're on the call side, you add on a dip to lower your cost, your average, I should say, and then it will give you a decent play, assuming it's a range day. To me, I thought it was a range day, and I actually played out the way I thought I did, so I definitely got lucky on that one. It stayed within my thesis and my game plan. So then it took puts at 12.36, which is right here. I think I took it when it went underneath 581. I took the 58.25 puts again. I took it at $6, and they went from 6 to 9. So I took it up here, so 6 to 9. That's definitely pleased about that. Then I took calls at 1:30, which was right here. Again, it's not breaking new lower day. It's making a higher low, and it's starting to look like it's going to burst through VWAP. But I got it. I want to say I got it through VWAP, and I got the 58.35 calls at 560, and I think they still were green. I think I had a chance to get out green, but they didn't. It was a quick move, and the play just disintegrated, so I stopped out at 2. So can't really complain. It was kind of a choppy day. So with the big gap up, I thought we were going to fade. Because we had this huge gap up. Why can't I zoom out more? There we go. With this big gap up from 577 to almost a $5 gap up. I thought for sure we were going to fill that gap up. Didn't quite happen that way. Then on Tuesday, traded his room on Tuesday. SPY calls over 580.50, which was because we were dropping down pre-market. 580.50 is up here, right in this area right here, basically right above previous lower day. I do like the previous higher days and the previous lower days and stuff like that. They end up respecting it quite a bit level wise. So first 10-minute candle was red. I stuck to the call side because of the drop pre-market. Usually if there's a drop pre-market, it ends up popping it open, and if it gaps up, it ends up selling off usually. But this market's anything usual. Anyways, first 10-minute candle's red. The second 10-minute candle is an inside candle. Big candle, what, 580 to almost $1.50 candle. I hate seeing massive candles on the open because they end up being, if you take an ORB play, they end up being a fake out. So I try to avoid really, really massive opening candles because of that. So, but I did take calls at 10:58. Why didn't I not take that there? I didn't take it there. I don't know why I didn't. 10:58, which is what? Right here? Not quite sure why I took it here. I mean, I could have taken a new high day. Well, not high day, but off that wick right there from this big red candle. But I think because of this big, massive tail candle, I was probably afraid that we were going to drop right here. But we had another big green candle, a red candle. So I took it over 581.35-ish. I took the 58.35 calls at 650, and they went from 650 to 720. So yeah, that's what I ended up doing. Didn't really go anywhere. Just chopped around for a little bit, but I did take calls again at 11:42, which is right here. It chopped because I got this move right here, got rejected, came back up, and this level right here, this 581.40 area has just been getting rejected. What, 1, 2, 3, 4, number 5. Well, number 5 is where I took it. So when it came back up here, and as you see, the bottoms of the wicks, it's going up. The candles are the low candle, not the lows, but the bodies of the candle, body candle lows, I should say. Not the wicks, but the bodies were getting bought more and more. So when it did finally break that area right here, I did grab the 58.35 calls again at 550, and they went to 790 in that play right there. Again with these traps. I mean, same thing right here. I buy this new lower day. It ends up being a trap that ends up working out. And this is what the market's been doing. It's been so crazy. I buy this area right here. It traps you. Then it goes. I mean, this is what the market has been doing for months and months and months. And I really cannot stand it. But yeah, it ended up playing out. They went from 550 to 790 right there. So then it pulled back. I didn't buy here. I probably should have, but I did buy calls at 324, which is right here. Again, dipped, came back up, made new higher day. Ended up being a fake out, but yeah, it didn't really drop too below higher day, so it kind of stayed elevated over 582.50. So I did buy it when it did break over the 582.60 area right here. I took the 58.40 calls at $6, and they went from $6 to $8.10. So got a little bit of a play on that. Can't complain too much on that. Then on, excuse me, the 30th, traded his room. On the 30th, SPY puts under. SPY puts under 580.50, which is down here. I'm not quite sure why. This is again, like I said, it just it dipped and ripped. As you can see, it started to fade. I probably should have looked at calls, but I didn't. I was looking at puts, but I didn't take the puts. As soon as it got under 580.50, I should have taken the puts, but I didn't. Big red candle again, $1.50 plus. Actually, it's $1 plus. I was hesitant about grabbing it. I used to play ORB plays all the time, but they've just been really hit or miss. The success rate is probably right around 55%. At one point, they used to be like 90%. If the first 10-minute candle was red, 90% chance that the second candle is going to break new low of the day, have continuation. But over the last few months, there's just been morning chop, and the success rate on the open range breakout or breakdown just has not been very high whatsoever. So that's why you need to have more than one strategy in your toolkit or trading, because the market's changing, and what is working at one point in time is not always gonna work. Things are gonna evolve, things are gonna change. You need to adapt with it. So I didn't take puts, even though I probably should have. I just didn't. I didn't take calls here. I don't know why I didn't do that either, but I didn't do it. I waited and took calls at 10:40, which was right here, which was probably a stupid move right here. Got the FU set up. We got a massive red candle, green candle. So I waited for FU setup, which was right here, and then I didn't take. I took calls at 10:40. So yeah, right when it broke new higher day, I think I took it maybe in this candle or beginning of this candle, right in here somewhere. I took the 58.50 calls at 680. Then when it dipped, I bought more at 10:53. So it was in this dip right here. I bought more. I added, because I had that initially added at 680. I added at 4, and then my average was 540. And on that bounce right there, I was managed to get out. So then I took calls again at 12:40, which is right here on this drop. 12:40, yeah, and this drop right here. I got the 58.40 calls at 680, and they went from 680 to 860. So I got it right in here, right at the VWAP area, and it bounced and got a little bit of a play. So then I took puts at 152, and this is my other loss, was right here on the FU setup. I got it too prematurely. Get the big red candles, get the green FU setup candle. When it broke below 580.60, it tagged it like within a penny or two. I just grabbed it too prematurely. I grabbed the 58.25 puts at $6. As soon as I grabbed it, it went the other way, and I stopped out at 2. Then it decides to go. But I did buy it again at 303, which is right here, when it did break below this 580.50. I bought them again at $4.50, and they went from $4 to $7.40, so $4.50 to $7.40. So I can't speak right today, so you're gonna have to bear with me. I don't know why. My brain's working faster than my mouth, so I'm having trouble keeping up with it. So yeah, I took the puts right here a tad bit too early, popped up the VWAP, stopped out, and it came back down, ended up working out. See, this is the typical bullshit on all the plays. You wait for a setup, you get the setup, you take the play, the SPY goes the opposite way on you, stops you out, and then it ends up going your way. This is just SPY. It's been doing this for so long. It's so infuriating. Getting smooth moves these days are just impossible to do. So just gotta deal with it, I guess. So now on to Halloween. I only took what traded his room first on Halloween. We dipped. Traded his room, I said SPY calls over 577, which is up here. Then we had this massive wood candle. I don't know what that was, but yeah, I think it was a fat finger or something. First 2-minute candle was red, and I didn't take puts right here because I was looking at calls, but we got the FU setup right here. I took puts right here, right when it broke new lower day. I took the 57.30 puts at 760. Got these big red candles. So when I saw the green candle, I was like, okay, we get green candle and it breaks new lower day, I'll take it. So that's what I ended up doing. The 57.30 puts at 760, and they went from 760 to $10 on that drop right there. So that ended up being a good play. Then I took puts again at a 143, which is right here. Right when it broke below this 5,750 area. I remember taking this. Took the 57.20 puts at 670, and they went from 670 to 12. Huh? How'd they go from 670 to 12? There's no way. $670 to 12. I think I fat fingered something, but yeah, if I had to guess, I got it at 670. I would say they probably went to probably $8 or $9. So if I had to guess, I don't know why I put 1240, but just ignore that. And I only took 2 plays on Halloween. I had things to do, and in the market, look at how small the candles are. I mean, that's not worth playing. And just look, this last 2-minute candle just was crazy. Then on November 1st, SPY calls over 572.50, which was at this high right here, rounded up to the nearest 50 cents. And I waited for ORB, first 2-minute candle. Even though I look at this candle is $1, it's almost $2. But I still took it. I still took the ORB, thinking we were going to have a big bounce, and we did have a big bounce. So I took the 57.65 calls at 670, and they went from 670 to 15.90. So that ended up being a good play. Then I took calls again at 12.48, which is right here at this dip. I took a chance as I bought the dip right at VWAP. To 57.60 calls at 680, and they went from 680 to 1580. So I get another 100% play on that. So you get 100% here, 100% here. Calls. I took calls again at 12.57, which is right here, right when it flushed through VWAP. I remember saying that once it flushes through VWAP, I was going to buy calls, and I did. I took the 57.50 calls at 640, and they went from 640 to 11.60 right there. Then I took puts at 338, which is right here. 338 right here. I must have took it right underneath 571.50. They went from, I got them at 370, and they went from 370 to 820. So that ended up being a good play. So yeah, more or less what I've been doing lately is if the intraday trend is up, just stay with the intraday trend, because any dips they get bought. The market just, once it picks its direction, it just keeps going. But you mean you just can't blindly buy calls or blindly. I mean, if it's up, if the market's up, you can't blindly buy calls. If the market's down, you can't blindly buy puts. You have to wait for the opportunity, the right opportunity. That's why you need to be in the room and listen to what I'm doing, and don't be a gunslinger. Don't be stupid. Try to use your head a little bit. So ORB play was perfect. Buying the dip, because the market's in an uptrend. They have these massive dips. They're going to get bought. That's just the way it's been happening. And the market's still up, even though it's making lower highs right here. The dips are still getting bought, even though lower highs right there. But every dip, bought, and it just gets bought. It keeps getting bought. So, and then when you have the down days, every pop is just getting sold. I mean, pop, sold, pop, sold, pop, sold, pop, sold, pop, sold, pop. Then it got crushed. So stick to the one direction. But I'm more leery about, because the market, we're going into elections, I'm more leery and more hesitant about buying the pop. I mean, not buying the pop, but shorting the pop than I am buying the dip, because they're trying to force the market up. So buying the dip, the market's going to end up, based on what's been happening lately, the dips are going to get bought. But when the market pops, I don't, on a down day when the market does decide to rebound a little bit, I'm not buying puts up here and hoping that it will fall, because the market could just V-rally based on manipulation and elections. So to me, on down days, I will look for new lower day before buying puts. I'm not going to buy put up here. I'm not going to buy a put up here or up here, versus what I did over here, where I was buying calls on the dip, because the dips were getting bought, because they want to keep the market up. But on down days, I mean, you could see massive, like this, it drops, then it just V-rallies like nothing. It drops, and it's not really good and it just chops there. But I'm trying to figure out, show, like right here, it drops. And if you bought puts up here or up here, you would have got screws. It chopped and it tried to V-rally a little bit. So you just got to be very careful of that. See right here, this is another perfect. I mean, yeah, it popped. You could have shorted. But this V rally right here could have happened here, could have happened here, could have happened here. So to me, on down days, it's better just to buy the puts right down here, catch that move. And if it breaks down here, catch that move. If it breaks down here, catch that move. If it breaks here, catch the move. But if it does this, there's nothing to catch. I mean, if you bought puts up here, you would have got screwed. So that's what the point I'm trying to make is that if the market's in an intraday down day, buy puts when it breaks new lower day, and if the intraday is up, it's buy the dip. I mean, buying the dip could be risky because they could just open the floodgates and flush it, but the chances of them do that are a lot less versus a down day V rally. So I'm just trying to point out that this is the way the market is right now. How the market's going to be after elections could be a completely different story. We'll just have to play it day by day and see how it acts and just play off from that. And we'll make adjustments as needed. I've been doing this for a long time. I've had to make several adjustments here and there based on the way the market is behaving. And there is no surefire strategy. You just have to kind of overcome and adapt to the market. I mean, it's the only way you're going to survive. You can't be a one-dimensional trader where you're just playing one strat and that's it, because those strats are not going to be good anymore. They'll be good for a while, then they'll stop, then they may be good again. I don't know, but that's just the way the market is. So I know I rambled a little bit at the end, but I was trying to drive a point home. Hopefully you caught it, and that's going to do it for the recap. So thanks for watching.